Hello, welcome to my channel today. This is the King's Tutor. If it's the first time of joining us, thank you for clicking to this. Ensure you like, comment, and you like the video, please share to your classmates and colleagues. Now, today we want to continue on what we started. We want to see source document. Source document. Now, what are source document? Now, source document from the word source shows the documentary evidence of recording in a book of account. It shows details of or give more information on some transactions that was what made. Okay, so we have different aspect of the source document. Now we have what is known as the invoice. We have what is known as the credit note. We have what is known as the debit note. We have what is known as the petty cash voucher. We have what is known as the statement of account. And we have the receipt. Okay, so these are the aspect of the source document. Now, what is invoice? Now, the invoice is a document sent by the supplier, okay, to the buyer that shows full details of the goods that was sent. The invoice shows the full details of goods sent by the supplier to the buyer, okay, and this covers the quantity of the goods, it covers the price of the goods, it covers the discount that might be given, okay, and also the terms of what payment. Okay, so the invoice shows the details of goods that was sent by the supplier to what the buyer. Okay, so most times we want to know in a particular recording where the goods that was sold is from. So we tend to check the invoice to see the price and if there was discounts that was given. So invoice is a type of a source document. So the next one is a credit note. Now, what is credit note? Now, the credit note is a document that is sent by the supplier to the buyer to correct an overcharge. Okay, to correct an overcharge on the buyer based on the fact that some goods that was previously bought has been returned by probably defection of that goods or spoilage of that goods. Now, for instance, if a seller sends, okay, let's say a buyer, for instance, sends back a goods to the supplier or the seller based on the fact that the goods is not good, okay, so it is the right of the buyer to get a refund. So most time the seller will have to send a credit note to the buyer indicating that, okay, there has been reduction in the amounts that was previously owed. Okay, for instance, if the buyer was owing, let's say $100, if the buyer was holding $100 and the goods that was sent is $20, so the seller have to send a credit note indicating that you are no longer owing $100. We have deducted the $20 worth of goods that was sent, so you are now owing $80. Okay, so the credit note is sent by the supplier to correct an overcharge that was made to the buyer. So the next one, the debit note. The debit note is the opposite of the credit note. Debit note is a document that is sent by also the supplier or the seller to the buyer to increase the indebtedness of the buyer. Okay, in this situation now, probably there might be some item that was not counted why the seller gave the amount of such commodity, of such goods. So if probably after the buyer must have gone, he now realized, so definitely he has to send a debit note indicating that there was an undercharge. So he has to increase the indebtedness of the debtor. Okay, so in this situation, for instance, if before now the buyer is owing $100, but what was supposed to be there is 120, and he did not see it, the seller. So he had to send a debit note indicating that it is not $100, it is supposed to be $120. Okay, so that's debit note. The debit note is sent to increase the indebtedness of the debtor. Okay, the next one is a petty cash voucher. Now, in our other video, we saw petty cash. We said the petty cash book is used to record minute expenses. So the petty cash voucher covers or entries in terms of the petty cash book. Okay, it covers credit entries in the petty cash book. So the petty cash voucher covers that. The next one is a statement of account. Now, the statement of account is a document sent by the seller or the supplier to the buyer, indicating the debit on the account, the credit on the account, and the balance due as at the particular period of time. Okay. Also, the statement of account can be seen as that document that is sent by a supplier, which is most time it can be a bank, sent by the bank to its customer, stating the business transaction between the bank and its customer, okay, and the balance due. Okay, so in the statement of account, it will show what has entered the account, what has left the account, and the balance due as at a particular period of time. Okay, so that's statement of account. Why the receipt? Now, the receipt is a such document that shows evidence of payments made. Okay, the receipt shows evidence that a payment has actually been made. So these are different source documents we have seen. Okay, so I want to recommend a video for you now, a video that comprises of accounting past questions and answer, different accounting past questions and answer. So I ensure you watch that so that you can enhance your knowledge on accounting. I see this video, watch it, this particular video, watch it now. Thank you very much.